Okay. So Sparrow, can you see my screen?
Yeah, I can see your screen.
Alright. So today we're going to be using the good chat to learn. We're going to be using SAUSD. So today's topic, first of all, before I go into today's topic, the last topic we did was advanced market structure, and I said it before that please always go through the it's actually not a waste of time. You want to be profitable, you don't have to be lazy. Okay, me that is answering those questions, I still see the numbers of them. Sometimes I come there over, like this last one 125. They answered all of them. So you don't have to be lazy or reluctant. And the reason I know that some persons don't have notes and some persons are not going through the questions and answers I'm giving to people is because they keep repeating the same question somebody else asked the previous time. And all this is actually like taking our time. Time would use to like answer other people, would be like somebody is asking, um is the first break of structure inducement. Meanwhile, I answered somebody else just not quite long. So you can always go through the questions and jot down my answers. Okay, jot down my answers and make it like a revision for your own self. That's part of putting in the work. Putting in the work is not attending classes. If you have notes, there are some questions you won't ask. You just go like straight to your notes and then the answers are there. So please let us like save the time and also help ourselves by having a notebook where I am teaching you, writing and jotting down, endeavor to rewatch the videos like 3-4 times before the next class and jot new things down again. Then study your notes a day or the same day before the class begins. You see that you're not going to be among those people that are asking a lot of questions. I am taking note of people there. I see how the kind of questions they ask. There are some questions you ask and I conclude that this person was not listening while I was teaching, or he or she came late, or they don't have a notebook. So please let us try our best. Okay, so we are 60% done with advanced market structure definition and all. The rest to be coming as the class goes on. Alright, so it's very simple. If this one does not break structure this high, it cannot be called an inducement. This guy is the inducement. As simple as that. Two internal break of structure makes up an advanced market structure formation, and three internal break of structure three internal break of structure makes up an external break of structure. Three or more makes up an external. So because these internals, these break of structures are found inside the external, that is why it is called internal. Then the most recent one, or where the current market is, will be seen as an inducement, while the next one that follows becomes a disruption. Now let us go into today's topic, which is order flow. So what is order flow?
Sorry, are you recording?
Yeah, I am. This symbol here is, I'm recording my MacBook. So yeah, The order flow is simply price movement in a particular direction or a particular trend without an interference or an interruption. A particular direction without an interference or an interruption. Now, for this point to be an inducement, it means that what series of other guys are there, okay, like series of other internals are there already. Now we have both the internal order flow and the external order flow. Please give me a minute. All right, let's continue. Sorry about that. So yeah, um we have both the internal order flow and the external order flow. The internal order flow has to do with lower time frame, where price goes in the lower time frame without an interference, and the external, when price goes in the higher time frame without an interference. Okay, now these two interference happen in two different ways. For the internals, it has to be two most recent in break of structure internally taken out before we say that we have a disruption of or an interference of the internal order flow, like these two. Okay, like these two. Then for the external, it's simply price taking out the extreme. Okay, this one is not like taking out just like two from the 4 hours time frame. I saw some persons marking out they're marking out their, I think, disruption from the 4 hours time frame. That is wrong. Okay, if you are calling this structural disruption, this change of character disruption, then what are you going to call the internals? Probably your entry is 4 hours time frame. But I doubt anybody will want to trade once in 2 months, once in a month, once in 3 months. Because I told you guys that if you are using 4 hours time frame to get like you're using it in place of disruption and inducement, it means that the first external will become inducement, the second external will become disruption, and you will be taking your higher time frame structure from the daily time frame. That's very, very far. So yeah, I want to make a correction on that. Okay, so internally the interference happen in twos, externally it happen in one. That is taking out this guy, one, in twos taking out these two. All right, so we have uptrend, downtrend, and consolidation or ranging market. I know Steven already did justice to that. You all know uptrend, downtrend, consolidation or ranging, price within a particular area without taking out any significant swing point, it keeps roaming in that particular region, it's considered as ranging market, and everything here will definitely, one of them will fail. Either it fails to the upside, it fails to the downside. But we do not have to trade a ranging market. So order flow is a particular trend. Talking about the trend is not the ranging, okay? It's either uptrend or downtrend. When there is an interference, okay, when there is an interference, it's either it interfered when it is going up, or it interfered when it is coming down, okay, or it keeps ranging without taking out any point. All right, so let's go into the chart. First of all, the rules of order flow states that price should not take out two internal break of structure, and externally price should not take out one external break of structure. But when we say take out, what do I mean? It means like take the point gets, price comes below that point in an uptrend and comes above that point in a downtrend. But they're actually like qualifications to say. That's why some persons that are already having their entry models, I saw them in the one and execution. I actually don't make a comment about that because I believe that time will tell. Okay, I don't seek validation from people, so when people seek validation from me, it's quite funny, okay, because you're doing this thing to get money. If you want to buy directly from this point, there are some qualities you should see from here that should make you buy. And if you don't want to buy here, there's something you have to do to wait for this point to create before you buy from here. It's not all disruption, because I said the two, this makes it invalid for the particular trend, doesn't make you make it certain for you now to enter from here. There are some logic behind everything I'm teaching you, and as the class goes on, you will understand better, okay, only if you pay attention. So this point here, as expected, is the point where we can take entry from. The inducement, which is the most recent, you should not take entry from there, okay. You should not take entry directly from the inducement, but the inducement can be taken away and reclaimed, comes back to it again after tapping any zone that can push it up again. We'll get to that soon. All right, so what am I trying to say? Let's just put it for now, because you have not learned the last point of true mitigation. Let's just put it for now that once anything happens like this zone is no more safe to buy. It's now considered that it is a disruption of the ongoing internal bullish trend, and when that occurs, every other internal structure turns to liquidity. I said liquidity is money, okay. Liquidity is money, and money has to be taken out from this market, okay. So when this point is taken out, the other guys turns to internal liquidities, okay. They turn to internal liquidities and they have to be taken away. So if this fails, it depends on the way it feels. You don't have to buy from here or wherever again. It is said that price will go down till the external low, okay. Price will go down to the external low, and then if it gets exhausted, let's say that we have the external low, like let's give this the external low, and we say price gets exhausted and it could not get to this external low. Maybe like he just did it a few things like this and it could not get to the external low, which is this, and then it reverses. Now only one thing can make you start buying again, and that one thing is price has to take out another disruption like this. Now when it occurs, it makes this point a disruption of this ongoing internal. This is an ongoing internal bearish order flow. Okay, so without there is a disruption, now this is where you can now start buying again, because this is a failure of a sell position at this point. Let's assume you were selling here. The failure of it, let's say you kind of sold a bit, so the failure of it creates a flip of this trend. Okay, it created a flip of this trend. So what do you have to do? You have to start buying. All right, you have to start buying.
Sorry to interrupt. Please, if the audio and the mouse pointer is not lagging on your end, can you please drop messages in the discussion group, please? So I know if it's my network or if it's a general issue.
Okay, let me check from Telegram on my phone. So is there a complaint? It's lagging. The mouse pointer is too small. I did not adjust it again. This was how it was from the last class. How big do you want it to be? Some say they cannot hear me. Can you hear me now? I think probably there was a disconnection or something. But not to worry, the recorded video will not lag at all. You know, the recording is not from Telegram, so it's not going to lag at all. Alright, the recording will not lag at all. This idea of creating PDF for each classes, the whole idea of PDF ended in basic class, and I was even surprised Steven was doing that. They don't learn like that. That's like a nursery way of learning. They don't learn like that. Creating PDF, you can create a PDF with your own notes. There is recorded video for you. You have creating PDF is like you don't want to write. That is why you need that PDF, because you do not want to write. The whole idea of that, I believe everybody is not a newbie anymore, because you have passed that basic section. This is advanced. The recorded video is here. Please always write. Create your own PDF by yourself. Write and ask your question. I will always reply the questions, except you send your question to where I did not inform you. I told you, I said everybody should send their questions. Everybody should send their questions to the preferred place at the specific time. Okay, so if you send your question elsewhere, it will not be seen, because I have so many messages coming from this particular Telegram, very unnecessary discussion. So I come there to answer all your questions and just check how it is going and all. So please, you can do your PDF by yourself. Let's proceed. So I said, now you wanted to sell from here. Okay, the whole idea of price taking out this guy and then we start buying again is because we now have a disruption internally. So what would have happened is that, assuming that these people continued selling and probably took out this guy, if you observe well, it would have created an external, bearish external, and a change of character like this. Okay, and if it doesn't happen like that and they get exhausted and they start buying, it will still create an external. So it's just like a reversal for continuation is disruption of order flow and clearing out internal liquidity. A continuation, a reversal like this is a reversal for a continuation, because normally this trend is an uptrend. So a reversal taking out internal liquidities after a disruption to create what? A new swing high, taking out a new external. Okay, so this is how it looks. Let's go into the chart. First of all, I said you have to draw your your external from your 4 hours time frame. So this I drew to this point. This is the 4 hours time frame. Okay, this is the 4 hours time frame. I marked out my externals and I gave you guys the qualification for an external. Take this guy out and create inside of it. Take this out. Take this guy out. Create the one of taking out an inducement from here happens sometimes it doesn't happen. Whichever way, the one of creating inducement inside of it is compulsory. So there was a change of character here. This is a bullish external order flow. This is a bullish external order flow. You can see price kept respecting their lows without taking it out, where there was a change of character was here. And like I explained before, the same thing applies to the external. If price is exhausted to continue selling, all you have to do is to give a disruption, which happened here, and then what happened again? It started buying again until what? I said it created what? A reversal for a continuation. So and then it took out the high again. The uptrend continued. I mean that downtrend wanted to continue, they just breaking the lows and coming down, but instead what it took out this guy and gave us internal disruption. I'll go to the lower time frame and then what started buying till where price currently is. So in essence, what am I trying to say? Order flow is very important. Market structure is most important. If you're trading against the structure. I saw somebody doing something like this. I think it was I think it was a downtrend. Yeah, it was a downtrend, and the person marked this point as a change of character. That is wrong. A change of character cannot occur on a downtrend. In a downtrend, how did this change character? Were they on an uptrend before? You have to be on a particular trend before a change of character occurs, because it is simply taking out the strong point of the previous trend. So where is the previous trend here? Meanwhile, they were just selling on their own. It is just a break of structure to the downside. And not only that, price was still selling, and somebody was trying to buy from here because he saw entry model. No, what are you buying from a downtrend for? The only reason why you should try to buy is if an internal disruption occurs, and the buy is even a temporary buy. You are buying to go and sell from this external high. It is when the external high fails, that is when you can now sell. You can now start. If this external high fails, that's when you can now start buying again. Okay, but price just gave an inducement. Price, I think the price was like this. Let's use this as inducement and this as disruption, and then this eye just got taken out. Price will go here to sell or tap on the nearest point of interest, and then you enter. But somebody was trying to buy from here. Why? On a downtrend, the most important thing in all of this is the trend of the market and the order flow. Okay, the trend of the market and the order flow. You do not try to buy or sell from against the trend. Yeah, you do not try to buy or sell against the trend. So that is that on that. Let's go into the chat to check our internals so we can go soon. Now for the internals, let's use past price action. Okay, let's use alright. Yeah, look at what I was talking about here. So this one is price took out, I think after it bought here. This is the disruption. Okay, so the inducement over here that got taken out. Then this was the disruption. It bought for a while, then later got taken out. Okay, then this was their external point. So yeah, price created one, So for this trend to continue, what happened? It simply took out this guy. Okay, it took out this guy, and then what happened? The uptrend continued. And so on. And that was what I explained in that place, that price sometimes might get exhausted or just want to do a thing. It takes out a point of interest and then wants to sell, gets exhausted, and retrace back again and continue on that particular trend. It's just called a reversal for a continuation. Okay, got taken out. This is inducement, so it's not a change of character. And what? Continue buying. These are internals. Some persons were asking what are all these breakout structures inside the internals. They are structural liquidity. We'll get to that soon. This two can be one, depends on how you want to draw it, because this low came below it. So anyhow, you can do it like this, or you can just make it one. So this is a bullish order flow. I think this broke this high. Okay, so simple, just like that. This is a bullish order flow. Now there is an entry model for continuation. Okay, there is an entry model for continuation, like continuation for simply just order flow where price just like moves like this, and this is what I meant. You keep buying from this point. Let me draw it again because I made a mistake. Let's say price has tapped on your initial entry. Okay, let's say for example this is where you wanted to buy from. Price tapped in there, and now you want to follow up, probably stacking, opening positions as time goes on. Okay, so price simply might just be doing like this for each break of structure. So it's still maintaining, and the order flow is still going as it should be, just like this one. Now this thing is a break of structure here, making here 1 point, and this one here. So you can see this one got taken out, but it's actually still buying. So this is what I did here. It was this one, and it's still buying. But that doesn't change the fact that this is still the disruption low, that if we should get a change of trend, it definitely will be this point. This did not break this high, that's why this guy is inside here. Okay, another example again. These particular ones are used for continuation. Okay, like this one too, inducement taken out, and then what? Don't forget this thing that started buying actually tapped on something. We'll get into that soon. And then it bought. back. So okay, this one price did not come back for it. Did it take it out? Okay, yes, but did not come back for it. Not there. Okay, I think we have this. No, it's just like a continuation, kind of like after price is moving, you are still following your order flow, maintaining the higher highs and higher lows, higher highs and higher lows, because sometimes these pairs, after they move, they hardly come back to disruption to buy, like the way gold is moving now. So how do you follow up with this kind of trade? Okay, when it start buying, it just keeps buying and buying and buying and buying. How do you follow up? So that's actually this one that we are talking about. So we'll get into that soon. Enjoy the class as it goes on. Okay, smoothly, no problem at all, and try to study. Very, very important. Very, very important. So this is what happened. In case you're wondering why gold is buying from here, it's actually a continuation, but it doesn't change the fact that this point there is still the disruption. There's the inducement. It broke this high with the body of the candle. I said weak to weak is not a break of structure. Weak to body is a break of structure. Weak to body, body to body, weak to weak, body to weak is not a break of structure. So this is a continuation of gold. Gold actually is a pair that loves continuation. If you can trade gold very well, I don't even think you should even divert to any other pair, because when it starts buying, it starts buying. Okay, when it starts selling, it moves like that. The only way you can get a good entry is by entering through continuations. Okay, like people that cut this one now, I expect it to do very well, because this is a continuation, except it wants to go down to the disruption. Let me see if this disruption is worth taking directly from entry. Well, to be honest with you, though I think I'm diverting before people go and touch it. Let's stop here before I move into entries. I wanted to explain a few things, but then I remember that all of you have unlearned and you don't know anything about what I'm talking about. So see you in the next class. 5 questions please. The rest question 12 o'clock. Spam me in the group. So Sparrow, please.
60 question.
GM Spyro, GM Sabiigal.
GM.
Mom, please, can you go to your chat?
Okay. I'm there.
Okay, Mom, it's kind of, I'm sorry, it's kind of a bit lagging at my hands right here. Please, can you go to the first part?
Fresh part.
Please, can you go back a bit?
Like this?
No.
Which fresh part?
No, to the chat, main chat, not to the draw. To the way you mark where there's a change of character onto the destruction of other flows. The first part, where there's a destruction, then continuation to the bullish back.
This one?
My hand, the hand, this one, just wait over there. I'm sorry, the thing is lagging here. That's the reason why. It's kind of slow. It's not even showing again here.
Sparrow, is it like that for you too?
I can see the chat.
I'm seeing the chat, but the thing is, okay.
You know what? Just type it as a question.
Ma, where you mark?
Okay, I'm listening.
Chat.
Don't worry.
Ma, it will be easier for me to say it
Alright.
in the chat.
Don't worry.
Okay, ma, this place where you marked. Can you move the cursor to that box, that small box you marked?
This one. This box.
Yeah. Why do you market this place as? Is it as an inducement? Is it as a POI or as a what? Because secondly, we have several small internal structures in there. And why do you pick that area in particular? Because as an intraday, I don't want to go far too much, because as an intraday trader, you might want to mark out a nearest part after the inducement has been taken out. I don't know why you mark that place.
Let me tell you something. As an intraday trader, yeah, if you're marking your nearest point, let me just be honest with you. Let me use the fib to check the 50% level. Yeah. Then it should be, I think, around here. Well, obviously it got taken out. Okay, it got taken out, so it did not hold. So it's just sticking to what works consistently than trying to please yourself. The reason why I gave a warning that for people that are still learning to not go below 30 minutes 1 hour, it's because the other time frames present themselves with their own storyline. In another time frame, this will seem to them as an external. Okay, but to you in your own time frame, this is not an external. And if you want to enter into the market, you cannot enter directly at the point of interest that is close to the inducement. Instead, price will tap on that point of interest and come above this inducement. Okay, even if the entry was here, it looks like the only valid point of interest you guys have here, you cannot start buying directly from here. If you would have entered, it would be price coming to this point and it should come above this guy here, above this guy, before you should buy. Do you get me? So no matter the trader you are, you have to look for quality over quantity, number one, and you have to look for point of interest that should hardly fail. You're not trading because you want to trade, you're trading because you want money. So because you want money, you have to look for something of high probability, okay, that should hardly fail. Because if you had entered from here, then it means that what we have, your disruption or whatever you would have called is taken out, you would have been selling from this point as this entry model breaker block.
Ma, I'm sorry, ma. The cursor is not even showing at my hands right here. And secondly, your Fibonacci setting is different from the one Steven gives to us
the same thing.
during
I've
the.
not edited it. It's the same thing.
Okay.
It's the same thing. Actually, it is. I just have to turn off these guys. It's actually the same thing. It's been long. I have not traded gold, so most of these settings are are just here. This is what Steven gave you now, right?
The thing is not showing at my hands. I don't know. The network is a bit lagging, and because I had a similar thing with GPP JPY as well. Because if you can recall, I dropped a question in the chat where I said about continuation, about change of character towards the downward movement. There's a retracement up for us to make a continuation. So, but this is the opposite side, whereby this is a bullish movement. So that's why I'm asking this question as well too.
It's so sad that you are not seeing what I was explaining, and because you would have asked the question in a more clarified way so I can understand.
Yes.
But it's fine.
He's lagging.
There's anyhow. Sparrow, is it lagging for you?
It is tough, but I think you would see it clearly when you watch this recording.
Alright.
That's one thing you were given here.
No problem.
Yeah, maybe in the recording. I will have to give.
If you watch the recording and you do not find clarity, then just ask it as a 12 p.m. question.
Okay, ma. I have another question, but I have to drop, so others go ask because it's just only 5 questions.
Alright. The next.
Baby, Baba do wonder rather. Sorry, you've been unmuted.
Good morning.
Good morning. I can hear you. Hello, I can hear you, please.
Can you take your chat on that upper side?
Yeah.
Yeah, that change of character. The higher high, would it be referred to as higher high or lower high?
This one.
This highest play, the peak.
This one.
Yeah.
This one.
Do we refer it as higher high or lower high?
Excuse me.
No, there's a change of character there.
Excuse me, sorry, please. These people on Telegram that should be learning, you live to learn, and you're chatting in this place and be saying that this and that. Can you just come here and learn? People have a lot of priorities. Seriously, you have to pay attention. The time you used to come here, people are asking questions that you learn from. You're going to the chat box to say that. Honestly, let's just proceed. Everybody with what they think is right, though. You have to pay attention. It's not as easy as you think. Your mindsets are distracted. Okay, I'm teaching. People are asking questions. You are going to chat. Who are you texting that is important than this thing that we are learning? Are you talking about this thing?
Yeah, that part.
Okay, what will it be called?
Would it be called the higher high or lower high? There's a change of character there. So it's in between the bullish part and the bearish part.
Okay.
So that part is convincing.
It's actually not going to be because this is higher high, higher low. If this would have been higher high, then we should have higher low to break it. So what it will be is going to be this, a lower high.
Okay, lower high.
Yeah.
Thank you.
Because the trend has changed. So this point now has become a strong high because it took out this point. So because it's going to be a strong high, it has changed. It's now going to be a lower high because it is a strong high that took out this low, and this low now becomes a weak low, no more a strong low. Do you understand?
Thank you. I get now.
Okay.
Okay, you've been unmuted. Please ask your question.
Hello, are you hearing me?
Okay, yeah.
Hello.
I can hear you.
Okay. Thank you for the opportunity. Okay, number one question, let me just be fast. Is can you please show us, there was one of the rules that you said for an external to be valid.
Yeah.
Can you please show us that? Can you please show us on this chart that you said that it must take out one internal of the previous external.
Okay, and then create 3 or more external internals, right?
Yes.
Okay, this
Yeah.
is an example of it now. Let's use this point as an example. So you can see that these things were taken out. If you go to the lower time frame, these things are internals. Okay, this one took about 1 2 3, took about 3, and then what, it created multiple of the internals before taking this high. For those that before I forget, for those that were also asking if something like this can happen, let's say it took out internal and then it creates like 2 and take this out before it create 3. Yes, this is still an external. Okay, until a new external is formed, that is price takes out this guy and then create 3 or more again, this thing continues. It's just like this one that gold is on. Sorry, I'll get back to your question. Let me just, because I remember now. Just like this one gold is on now. You see that as a new external has not been created, this thing is still going, and this point is still their external. This thing is still going. It goes on and on until what, a new external is created. How can a new external be created? Either this disruption now gets taken out, and then, or the inducement that has been taken out still remains there. But this inducement cannot give us a swing high currently, because this is where it is. Yeah. So something like this happens, this disruption gets taken out, and then let me take this off here. And then we start having this even if it takes this thing out and then create, it doesn't matter. So rather a new is still following the other flow. So but at least he has to like create like something like this, okay, or else it keeps going until a new one is created. But note that it's now going to do something like this. This is the swing point, and then it creates like 1 2, takes out, okay, 2, takes out this high, and then price retraces here and now start creating this one. Cannot be an external. But what does it matter if a new external has been created? Once a new external has been created, the other external will not even be valid anymore. Once there is a change of character, it is called transactional liquidity. We'll get to that soon. So back to your own question. Sorry for cutting you. It just crossed my mind, so I saw it question. That's why I just addressed it before I forget. Okay, proceed please.
Okay. Did you get the first question? You answered it, right?
What
Hello?
was the question? Yeah, I'm listening. What was the question?
There was a specific rule that you said for an external to be valid, it has 2 qualifications. One of them, I think you said, is non-negotiable.
Yeah,
it must take out at least one internal of the previous external.
Yeah, it's actually negotiable because sometimes it does not happen. But when it creates internals inside of it, but it's I think, have I seen a scenario where it doesn't happen? It's hard to see actually, but I believe that it sometimes doesn't take, but it's actually really hard. Sometimes it even takes out an external itself.
Okay.
Sometimes it takes out an external itself to form another external. Something like this is like an external, takes out this external itself, and then that's like the other one that happened before. I think price was like, where is that one? Okay, yep. Look at it. This one now is an external that got taken out to form a new external. So sometimes it can take out internals, sometimes it can take out an external itself that is the scenario of price like taking out this guy, an internal disruption, and then what, start buying. Okay, like he was selling, internal disruption occurs, and now he used this guy as like, yeah, as a liquidity. Yes, let me put it that way. We use this guy as a liquidity to form a new external. It happens. It can take out internals, one or more internals. It can take out an external itself, or it might not take out any on rare occasions. Yeah, but the one we don't negotiate on is creating internals inside. Like, creating internals is very, very important, because if there is no internals, there is no external. Price moves from that internal to the external. So if this thing does not create an internal, that point cannot be called an external. Do you understand?
Yeah. Thank you. Let me, for very last question. Sorry to be.
Sure.
If you open your chart right now,
Yes.
and your two previous external are invalid, what do you do?
It's very simple. If the two previous, which I doubt there's anything like that, because why? Honestly, except you have a chart example, then let's look into it together. Let's not like assume.
But,
do you have an example?
Yeah, I think I will send it on the,
as a question.
I have it, but I will send it on the question box. Yeah, but you can just say what you wanted to say.
Okay. So I was like saying that I actually doubt, because it's like saying the rest of them, then it's just simple. Then it's like this, it's like this, it's like this. Okay, it's going to be like this that happened, because I believe that, as you can see, like this is a very long queue of internals. It's a very long queue of internals. So basically, can you hear me? Can you hear me, please?
Yes, I can hear you now. Okay. Yeah, I can hear you now.
Yeah. So this is like saying that every other thing, all of them, we just go back to the only valid, the last valid they have. All of them, we just go back to it. Yeah, you get me now. So just like this one.
Okay, because why I was saying that is,
okay.
Because why I was saying that was like, you said we are going to merge something into something. So
of
if
course, that's like this one now. They have not created any external. Maybe like an external wanted to be created, it's not invalid and all of that. Okay, they are all now inside this one. If there is a disruption, now we expect price to sell to this point. But if we cannot sell to this point, anyway, it gets exhausted and it reverses and takes out a disruption, it means that we have continued a new internal order flow. Okay, you get me now, right? So it just continues. But in the process of that, it's going to now create an external. So when that buy is ongoing, you look out for that external that was created in the process of this, because that's where you can only sell from. And if that place does not hold, it means that what, it just formed us a new swing high that got taken out, and this point now becomes what, or external low, and we continue, and that is it. It's just like following price movement, the order flow, and all of that sort. Did I answer your question?
Yeah. I will rewatch the video so that I can get everything clearly, because the next one is a bit lagging.
Okay.
Thank you.
You're welcome. Any question that cannot come in now should come in by 12 p.m. You will get your answers surely. Okay, let's proceed.
Okay, Foreign, you've been unmuted.
More? Yeah, go on. Hello, can you hear me? Please go on with your question. Sparrow, can you hear me?
I can hear you. Can you hear me?
Yeah, I can. Who's the person asking the question?
You unmute someone else. I don't think they're active. Toba, you've been unmuted. Ask your question. Sorry, please, Mimi, when you're done with the class, just check your DMs on Telegram.
On Telegram. Okay. What's your name? Send a hi now, so I can.
It's Faruk.
Just send a hi. So. Okay, Sparrow, it's you. Okay. Yeah, your voice changed. Okay, sure. Is there any other question?
Can you hear me?
Yeah, I can. Foreign.
I was asking, I didn't really get what you said about what you explained about inducements.
Okay, like what are inducements?
Yeah, exactly.
Okay, the most recent break of structure internally is an inducement in the lower time frame. When you hear internally, I mean the lower time frame, 1 hour, 30 minutes, 45 minutes. Yeah, just like this particular one now. There's an inducement over here. So
Okay.
yeah, the next one that follows after it is a disruption, a low that causes an interference in the trend. Do you understand? A low or high, because it could be uptrend as well.
Okay.
Yeah.
Okay, thank you.
You're welcome. Let me take one more question. Anyone?
Yeah, Victor, you've been unmuted. Hello, Victor, you've been unmuted.
Okay, please. Good. Please, I wanted to understand when we are having these weeks that are, let me just put it, the weeks plenty at that spot, the weeks are many in that spot.
Okay.
What do you call that kind of a situation? Yes, what do you call that kind of a situation? And we are expecting maybe a pullback or a break of structure at that place, but the weeks are many at that place. So what do we do? What do you call that, please?
Please give me a minute. Okay, can you hear me? Okay, I'm listening. So what were you saying? Sorry about that.
Okay, please. I wanted to understand something.
Okay.
This most recent place where you put the long
this one you mean, right?
something there, please. Yes, please.
Okay. Like, why are there so many weeks there?
Now that can. Yes, and if we come across such, what do we do?
Okay, don't worry. When we get to entry, you will understand. It's called reclamation. Price taking out a point and then coming back to trigger it, like mitigating it. The weeks do not cause anything. It's not a problem. Okay, the weeks is not a problem. It's just like price tapping on. What actually matters is following what the candles tell. Just forget about the week's reaction until it signifies like something to you. Yeah.
Okay, thank you. Quickly, I'm hearing you mentioning inducements and structural liquidity. Does it mean that the liquidities we heard of in the basic side, most those ones are not that valid too much. Like those trendline liquidity, those double top, equal high, equal low.
Nothing is like invalid in trading. What is it's called improvement. Okay, it's not like it is invalid. No strategy is bad, no strategy is invalid, but they get improved for a better consistency. Do you get? So most of those liquidity got replaced with something else, but people still use them, but I do not use most of them. Do you understand?
Okay, well. Yeah. I believe when we get to liquidity, I'll understand more.
Okay. For the person that said